Well, thanks so much for tuning into the Trade Setup. I'm Neeraj Shah, and unfortunately, I do not have very positive news. Irrespective of what the markets do on open today, you have to regard some of the things that are worrying the street. So, the pain points, and let me bring them out maybe in a chronological order in the event of they having happened or declared, and which is why I'm bringing to you this way. One, France locked down Paris as the third wave forced tough curbs in some areas. So, starting midnight today. Midnight, Friday midnight, Paris region will be in a lockdown. Apparently, 1/5 of the French population resides in the Paris region, which must be Paris and the areas around. So they get into a lockdown mode with some relaxations, of course. I don't want to get into details, but there is there. Maharashtra has reported the highest daily spike with 25,800 cases in the last 24 hours. This is as of reported last evening or last night or thereabouts. So this morning's report is yet to come, which will come in about half an hour's time. But this is worrying. I mean, all over India cases moving up, but Maharashtra in particular has a fairly high spike of COVID cases. The US 10-year Treasury yield went to 1.75 intraday, which is the highest since January 2020. So despite Fed's reassurances, the yields continue to move up. And as NBC News reported just about 1 hour ago, the first high-level gathering of the US and Chinese officials under the newer US administration kicked off in the most unpleasant way with the exchange of insults at a pre-meeting press event. So that hasn't turned out well either. So there is, viewers, let's not make two bones about it. Not too many people are able to understand, and it could be a variety of factors which is leading to this, but there is pain on the screen. Now, I'll get to the trade setup in moments from now. Quickly take you through what's happened. So Nasdaq, as you all know, started off weak and stayed weak throughout the session, ending about 409 points. And with this gash, Nasdaq has erased all of the 2021 gains. And what this has done is it's led to the non-tech names giving the highest performance. So Dow is beating tech by the most since 2008. And that is not to say that Dow is doing fantastically well. Yes, it's up 400 points in the last 5 days, but Dow is not necessarily doing fantastically well. It's just that the Nasdaq has come off so badly from 14,100 odd to 13,000 odd. It's been a sharp one-way move for the Nasdaq, and that is actually the pain point. Now, what is all of this doing to the Asian screen and the SGX Nifty? Well, that should come up on your screen. So Asia has losses, as you would have expected and anticipated. So that is not a surprise that we're starting off weak for the rest of the Asian bourses as well. And the SGX Nifty too. I mean, it may not show maybe as much pain as the rest of the screen, but it is showing pain. But we'll start off lower. And by the way, viewers, you got to keep in mind, this is very interesting data. I'm not putting it out, but I'm just saying it out, and you got to hear me well for this. In the last 5 sessions, and this is not taking into account today's pain, in the last 5 sessions, the Nifty's lost about 600 points. The Philippines index has lost about 200 points. The other Asian screen is actually in the green. So there are 2 indices which are being marked out for special treatment. One of them is India, one of them is Philippines. Now, you would argue why this is happening, right? I mean, I think there are a multitude of factors, including yields, of course, that are moving around. But you look at the plethora of IPO issuances in India. You look at the margin issues between brokers and clients, and that's not settled as yet, as what I understand. So multitude of factors impacting Indian markets specifically as well, not looking all that great. So the trade setup today is just that I'm being kind when I'm saying that market is failing to hold on to gains. Actually, the market is losing. But let's assume that even if there are gains in the market is failing to hold on to them. But the culprits are changing. You had tech yesterday getting beaten down while banking did not correct as much at all. And that was really amazing. That tech led the markets lower so significantly. The top 10 losers yesterday did not have a single bank. The Nifty is back below to its post-budget gap. A sustainable breach below this 14,470 level, as per what technical experts say, could actually trigger further downsides, sharp downsides. And then you're looking at 14,250 to 200, that channel as the support. And very likely that we'll do that, right? We'll hit that. And Nifty IT is mixed near-term triggers. So Nasdaq being soft, in all probability should impact IT, but Accenture numbers were strong, and therefore I'm saying it has got mixed triggers. And therefore I think that banking is likely to determine the near-term performance. Yesterday banks didn't crack. They've corrected quite a bit already, But I do reckon that if there is further weakness, then banks will play a part, and therefore banking could actually go below. Mind you, the last couple of days, FIs have been net buyers, maybe due to block deals and maybe due to otherwise. In yesterday's session too, about 1,258 crores, which is why maybe the banks are also holding fort. But let's wait and watch for how long this lasts. So there's pain on the screen. Make no doubts about that. Now, in light of all of this, what are the stocks to watch? And can they have market implications? Yes, they could. So Nifty IT, right? Can it have market implications? Sure, it could be a place of hiding. It could provide some shelter, despite the fact that it was the index that lost out the most. And the reason why I say this is because Accenture's numbers give some hope of glimmer of hope for IT bulls. So Q2 results were ahead of expectations. They beat guidance. The outsourcing revenue was up about 4% QOQ and 14% YOY for the third successive quarter, along with record bookings. And Accenture upgraded its FY21 guidance to about 6.5 to 8.5% YOY from 4 to 6% earlier. And remember, experts who understand Accenture would know that Accenture is a conservative company, much like Infosys. They believe in under-promising and over-delivering. I mean, Infosys of the past, the Narayan Murthy days, maybe even now, but at least back then. And therefore, people might believe that Accenture will actually do better than this 6.5 to 8.5% gain. And if Accenture can do that, can Indian IT follow suit? Sure, it could. So could IT stocks be a place of hiding today versus the hiding that it got yesterday? I believe it could, but let's wait and watch. Nasdaq is certainly weighing in on the minds of tech bulls. FTSE rebalancing today. But can this provide some relief? I don't quite know, really. Additions, the ones that you should keep an eye out for because of the quantum of flows around them. I think Reliance partly paid share. I think Apollo Hospitals stands out, so watch out for that. There is Honeywell Automation, HAL, Mindtree, Astral Poly, Varun, and then a few others. But these are the main ones that I picked out. So you got to watch out for these stocks. They could be interesting movers in the session today, maybe in the second half. If indeed we have a bit of a bounce in the second half, let's wait and watch. I think there is a bit of a pain point, maybe, around Reliance Industries and the future group stocks, and you got to watch out for these if they react at all, because the Delhi High Court has upheld the emergency arbitrators award that Amazon had won against Future Retail. They imposed the court, it's single judge bench, which imposed the 20 lakh penalty on the future group companies and given some notice to Kishore Biani and others to stay present in the court for future hearings, etc. So that's one point. But I mean, Future Group is not traded as much really, but if you are indeed a trader in Future Group companies, maybe you would want to keep a close eye out on them. I don't know if Reliance really reacts too much to this, but you never know. An interesting name, and I particularly like the thought process and the conservative approach of PPFAS, and they have bought about 2 lakh shares at about 2,780 per share. By the way, it means nothing. I mean, because PPFAS bought, you shouldn't buy it. Because I'm saying that I like PPFAS approach because of the performance that they put up. It doesn't matter. The stock could still underperform. So please don't go by that. But keep an eye out for ICRA. Do your research. They've bought in about 2% stake. You might want to go out and study the company and then try and take a call there. So there are a few stocks that could have some reactions. There are brokerage notes that have come out on Bajaj Auto after the dividend policy announcement that they made last morning at about 11:30 or thereabouts. And then Bajaj Auto had rallied already. Morgan Stanley is saying that Bajaj Auto, this is very encouraging. Their target price on Bajaj Auto is 4,400 rupees, even though they don't have a high presence in CVs, electric vehicles, I mean. So let's wait and watch if Bajaj Auto were to shine a little bit today. But largely expect some pain. And from what technical experts tell me, if we are ready to touch the channel of 14,250 to 14,200, if we are, then there could be some more pain. I somehow believe that there could be a bit of a bounce in the offing very, very shortly, or at least an opportunity to start creating long positions very, very shortly. Let's wait and watch. For now, even the quant indicators don't indicate that this is the right time to initiate the fresh long. Maybe in a day or two, they could. It is looking slightly jittery out there. Please be careful with your longs. But more importantly, if you're stepping out for office or for grocery shopping or anything, please wear your masks. Be careful. I know of people who've gone into private gatherings at houses and have gotten infected with the COVID. So you might not be necessarily safe at your office as well. Please wear your masks. Stay safe and try and have a good Friday.